Let's get to it. Thank you so much for hanging out with me at Let's Talk Business. Today we're talking Let's Talk taxes this time, because I just couldn't give up this opportunity to talk about this tax proposal. So I have like so much stuff in my head about this. So I want to encourage you all to ask me as many questions as you have as we go through this, because we have to admit that this is just a proposal. It says what was given to us came from House Ways and Means, information. So, and these are just proposals that also have to go to the Senate. And I don't understand all of the politics of it, but I think that the earlier we begin to address what might be coming our way, the better, because a lot of the information that I'm receiving and I'm reading, it's amazing how you can be, reading the same thing, looking at it the same way, and I'm not looking at it the same way, but we're still reading, we're looking at the same proposal, but two different reports will say two different things. It's amazing. So I have to read 3 different versions in order to try to get the politics out of it and get just to focus on the numbers of it, the money of this, right? This because that's where the power is for us from an AfroEconomic perspective. We have to prosper regardless of who is in the White House. We've got to make this money move regardless. We've got to make it work for us. We've got to make it work for us. So a key thing in the tax proposal that I want to talk about first, because I saw that that was the most frightening. It kind of shook me, and I was like, is this true? So I wanted to have to do, I'm gonna look at the same, so I won't be able to see you for a second while I look at something else. But what I will be able to do is probably maybe share it behind me. But I wanted to talk about higher education. Oh, that's what it was. So you can see, you'll be able to see, because it came right from this, what you're looking at. So this is the 7 tax brackets switched to 4 tax brackets. We're going to get back to that, because that's the easy stuff. But what this headline was with CNN is that it was saying that higher education, is going to be hurt. Like it says, this is what the GOP tax plan means for higher education. So I come on down, and then it said the bill will eliminate a deduction on interest on student loans, a move that has borrowers up in arms. And while the student loan interest deduction could contain, you see this, could certainly stand to be improved, eliminating it entirely is the wrong approach. Now, that's a pretty strong statement, Ms. Dancy. No, this is courtesy of some group called New America. And he said that they're eliminating this loan interest deduction. And it was I'm trying to make that screen go up. That would be nice. That's it. So a student loan interest tax deduction allows borrowers to reduce taxable income by up to $2,500. So that's terrifying. There's a whole bunch of you that have student loan interest that you've probably been writing off. So you're like, oh my goodness, they don't want us to get our higher education, this and this and that. So I'm like, wait a minute. I've also seen headlines that they're saying that this is to benefit higher education, jobs, businesses, and help the low and middle class. So I'm like, when you have middle class people giving loans all the time, and trying to go to, higher education and everything, what in the world, how could this be happening when it's saying that another headline? So then I go and then I look at another post. So I start looking, and then I read in, it talks about, this is something from the Washington Post. Republican tax plan seeks to shake up higher education, tax credits, deductions, and benefits. And then I see that they get rid of that interest deduction, but they create something totally different. So it says student loan interest tuition reductions. The GOP plan would no longer allow people repaying their student loans to reduce their tax burden by up to 25. So this the plan would also do away with tuition tax break for university employees for their families, and they'll have to pay taxes on it. I want to tell you about the new thing that what happens is they've created a college tax credit consolidation. So the 3 higher education tax credits that you are only able to get one of anyway, the new benefit would credit families for the first $2,000 spent on tuition or books or supplies, and provide an additional 25% tax credit on the next $2,000 spent. So it's totally misleading to say that this is hurting higher education when they just created something that will benefit you even if you don't need a loan. If you're just paying for the higher education and you're not having to finance it, then you don't need the interest to write off, but you still would love to have a tax credit. So this could be, that it's not connected to the loan if you need it or if you don't. It's just if you're paying tuition, no matter how you're paying it, you're spending the money, you can do this tax credit. So really, we have to realize that there are some opportunities there for us, and this change is indeed not the end of the world. This could be a great opportunity for you. So let's go back. So we have to always look deeper. That's what we're going to always do in AfroEconomics. Not allow them to the media or any group that's providing information to the media or whatever to get us terrified about, oh, this is terrible, I'm not going to have my tax credit for school. No, you're not going to have, if this proposal goes through, you're not going to have the tax credit for the interest on the loan, but you will still have the tax credit for the expenses associated with higher education. And they're adding on so many other things. Like I have a lot of clients that are paying for private schools and high schools and middle schools, so they're trying to incorporate ways to save for that commission, that tuition category also, and get some tax benefits there. So, and that's not something that's just for the rich. I'm talking about good, hardworking people who have chosen, Black people, who have chosen based on where they live or whatever decision that they made, their children may be going to a private school and they want that benefit, and that having that benefit doesn't hurt you because it's not taking money away and sending, it's just trying to give parents a way to save for those additional expenses, tax deferred, like you can do when you're saving for using a 559 or whatever you may be using to save for college tuition, but to save for other tuition as well. So, there's always a deeper way. There's always another way of looking at things. Now let's look at these income tax brackets that I have up here. Now, any questions from y'all from right now? Let me pull my screen up. Anything, just make sure you ask it. Eventually, I will make sure that I look down at this says, good afternoon, true, yeah. I'm reading Trump tax proposal. I was reading it the other day. Yes, do you think it will benefit entrepreneurs? Indeed, there are some benefits there for entrepreneurs. And what we have to do from an Afroeconomic perspective is to get more of us to take advantage of the entrepreneurship opportunities. Because there's a reduction in the small business income tax rate as well as large corporation income tax rate. So, definitely, and I will I have lots of information on that. So on our individual meetings as an entrepreneur, you have specific questions. As a member of AfroEconomics Entrepreneurship Group, definitely we can explore how to make all of the tax benefits that businesses have work for you. Definitely. And one of the things that has not changed is the government's emphasis on allowing you to save for your future. So for financial independence, for, that big word retirement, I don't like it that much because it makes you feel like you have a lot of time ahead of you. So I say it allows you to save tax deferred for financial independence. And we have to take advantage of these things though. So you still have these retirement plan privileges out there, but check it out. So with these individual tax brackets, look, I'm like changing it, so much stuff. I can't change it up there. I want to change it so that you can see it. And you're gonna have to go to the right window, y'all, so you can see it a little bit better. There we go. So the lowest tax bracket, and I'm afraid to tap too much on the screen because it's just a video, and it will start, look, it started dancing. I'm not even gonna claim it, don't jinx myself. So the lowest tax bracket, look at that. People making 0 to 44,000 or 0 to 89,000 married couples, their tax bracket is now 12%. It used to go as high as 15%, right? So then we have 45,000 individual to 199,000 to for individuals, and married 90,000. That's where the 90K comes in for married couples, all the way up to 259,999. You can go almost up to 260,000 at the 25% tax bracket, and that used to be 25 to 28%. Now it's at 25%. So, and then so that crossing over into 45,000 and getting into, those are the things that we have to be conscious of in our tax strategies. So you might be making money and not contributing to your work retirement plan, and you slightly go over 5,000 into this next tax bracket. Look at that jump from 12% to 25%, just because you didn't contribute to your work retirement plan. That's real. It will reduce your income tax bracket dramatically and save you thousands just by having that strategy. Basically, just by not going up this whole step, and you almost save the money for free because you were going to have to spend it in taxes. Interesting, right? So this goes up to 1,999 for this 25% bracket, married 90 to 2. Now that's married people, 90,000 to 259. And then the next is 35,000, starting at individuals with 200,000 and couples with, now that's a huge gap right there, from 45,000 individuals to 200,000 and couples 260,000, 35% tax bracket. And then look at your highest tax bracket at 39%, 39.6, and it was 39.6. It remains at 39.6, and contrary to a lot of things that we hear, the people who we may consider wealthy individuals making over 500,000, they did not get a tax bracket. They did not get a tax advantage from this change from 7 to only 4 categories. So but this tax plan basically eliminates many itemized deductions. And I've talked to you before about the majority of Americans are doing the standard deduction. So by eliminating it, and an overwhelming majority of Black taxpayers are using the standard tax deduction. So what this does, what I like most about this plan, is that it is simplifying. It is simplifying it so that more and more of you will be able to do your own tax return. You'll be able to do it. See, this will, because if you're not having to even worry about calculating all these itemized deductions, and if you just have fewer things that can be itemized, the things that will on this proposal, that will continue to be able to be itemized would be mortgage interest, property taxes, you know, and there's a limit on the property taxes, like up to $10,000. Don't quote me on that. And on charitable contributions can still be itemized, and there's a maximum on new. Now, people who have mortgage interest or mortgages that are over $500,000, you know, that they've been able to do, they're grandfathered in, but new mortgages that are placed that up to $500,000 or less, the interest on that can be itemized. So if you take your mortgage interest that can be deductible based on your tax bracket, your charitable contributions, your property taxes, and then all of a sudden, those things exceed the standard deduction, which is now being doubled, which is highly unlikely because most people were already doing the standard deduction. So the point of this change is to try to simplify things, you know, make it easier for you to do your return and do it with confidence. And so they are indeed, Dr. Williams, taking away the AMT. That's the alternative minimum tax. That is done. If this is approved, it will be done. It will be gone. So your wish, he said, I just want them to take that away. Well, that will be taken away. And then, you know, and that is but an attempt to make sure that, so this high income are still paying this high tax bracket, and they're not getting to write off. Most of them are the ones that would have a mortgage of this high extreme. So when they kind of say that this is really helping the rich, it's helping the rich so much, you know, you have to kind of really dig deep on, like, is that really true? You know, and it depends on, like, because there's people who are higher income tax bracket are paying extreme amount of taxes anyway. So there's been some changes in how people can allow their assets to be inherited by family members. And I feel that everybody here should understand that it is important when you have spent your entire life building something, building your farm, building your business, building it, and then you have to worry about the government taking half or more of it when you pass because you built it into something, then you will understand why we needed to have a change in those estate tax laws. But it says, as business owners with our LLCs, overall, this helps us with our W-2 income, and it helps you with the business. That helps anybody getting a W-2 that has that as far as simplification, and it helps the LLC, the business owner themselves as well. But on an LLC, and especially on a C Corp, you definitely would be getting a W-2. And on anyone, you know, that's getting a 1099 and doing their Schedule C should always be, you know, obvious that all of that is coming down when you have these flow-through entities like the LLC and the S Corps. A sole proprietorship is not even a separate entity. With the flow-through corporate entities that go into your personal tax return, you know, yeah, this was going to be the, you know, it's going to affect you because the taxation of these tax brackets being reduced. If you come down and you have your income tax bracket is helped from these changes, is going to help you no matter what you do. Business owner, not a business owner, anything, that is going to help you. And the biggest help is understanding and not becoming fearful and not allowing ourselves to be misled and seeing the power of it. So the plan eliminates itemized deductions except for those on charitable contributions, mortgage interest, property taxes, retirement savings, but it only allows mortgage deduction for mortgages of $500,000 or less. So we must realize that the majority of Americans that are homeowners, that the majority that own homes are not actually being able to write off their interest anyway because they're doing the standard deduction. If the majority of us are doing the standard deduction, then that includes, people that, so what the home, the realtors associations and realtors will see with this is that by doubling the standard deduction, now this is what this has happened. It's simplified, it's taken out those needs to try to look for all these. So when they say that deduction has been taken away from you, this is horrible. They took away XYZ deduction. Well, most of you weren't using it anyway because you weren't itemizing. So now that we're able to have twice, these standard deductions have doubled. So so when they say, well, like the eliminates the deduction for state and local taxes, that you had to use that to itemize in order to get off anyway. Well, it's not hurting you because that deduction wasn't benefiting you in the first place for the majority of you. So the doubles the standard deduction for everyone. The deduction for married and filing jointly will raise from $12,000, that's for married filing jointly, from $12,000 to $24,000. Single filers, the deduction was $6,300. That's now at $12,000 for the standard deduction. So the Tax Act proposes to eliminate personal exemptions. The exemption currently allows taxpayers to subtract $4,000 from income for each person claimed on their tax return. So but it's taking away the personal exemptions, but doubling the standard deduction. So you may have a slight change in that depending on the size of your family. Because if you had a larger family, then it's proposing that a married couple with 2 children making $56,000 a year may pay about $68 more a year. But I've also seen the same scenario saying that married couple, so it's all a play on numbers, depending on what that married couple and then what their particular situation is. So that the married couple will save like $1,200 with this new proposal. So the Tax Act eliminates the alternative minimum tax that we talked about. This helps those who are subject to that AMT, it's called. The AMT should affect those with income above $54,000 or $84,500 for married filing jointly. And that's probably all of y'all, or listening. So you have to realize you might not have even been affected by that. But Dr. Williams brought up a good point that affects a lot of people, and that's been eliminated. And for those who hate the current administration, they're not going to bring that out, that this could actually help you. So there's so you have these personal exemption that has been eliminated, replaced with the double the standard deduction. And then they've also created a new child credit. The Tax Act increases the child tax credit from $1,000 to $600. So if that family with 2 now had that $68 extra, they would get it back because they now are making $600 more off each child. If they are, so that child tax credit is from $1,000 to $1,600 and increases the income level. So more middle income families can take advantage of the child tax credit. It eliminates the marriage penalty. So that's very important, very important. 2 single parents receive the full tax credit up to a combined income. 2 single parents receive this full credit up to a combined income of $150,000, but the credit shrinks for a married couple after they earn $110,000. So this eliminates that penalty for that, and it boosts. And they're hoping that by bringing this in so that it benefits everybody and you're not penalized, you're benefiting. So it eliminates the marriage penalty as it relates to the child tax credit. Under the current system, 2 single parents receive the full credit. And then, so it encourages people to not be married, basically, but it shrinks for a married couple after they earn 110. So the research is showing that by not penalizing people for being married, of course, they're saying it boosts income, economic growth, and also, family. So the House plans to allow a $300 credit for non-child dependents. So that's for your mama and your daddy. You can now more easily get a credit for helping them. And then business taxes lowers the maximum corporate tax rate from 35% to 20%. Real nice. And the let me see. I want to let's what else I want to share. I know, and I'm going to switch because I have something else I wanted to discuss. And then, will this pass? We don't know. I want to go through a few more things before. Wait a minute. Let me make sure y'all got any questions for me. So, remembering that, in summary, your standard deduction, if this works, you're going to have a higher standard deduction, no more AMT. You're going to get a college tax credit that's not based on you having to take out a loan. Anybody who's paying for higher education will be able to take advantage of that, given that there'll probably be some income maximization and things like that. So, but there's always another look at everything. Always let's continue to look closer. A lot of the things that have been said that will only benefit, everyone else is in only the ultra and the ultra and the ultra wealthy, is not true, because those of us that are working every day, we are praying that everything that we're working on will eliminate that even tendency to think that because someone is doing really well, that somehow their success is hurting me, because it's not. So what we want to do is make sure that we are taking full advantage, and that's what messes us up, not taking full advantage of what the opportunities that there are out there for us. They're going to be looking a lot closer at nonprofit organizations, trying to make sure that they're not profit corporations doing business as a nonprofit. There's even an emphasis on this where they're talking about looking closer at private universities and why their tuition is so high, and they have these great big endowments, and what are they doing with that money, and why are they charging so much and not paying enough in taxes? So there's there is a lot in there to stop allowing the extremes to get away with a lot of the tax things that aren't being caught. So it's trying to catch a lot of stuff, but it's also, I like the fact that it's trying to simplify things and to allow you to take advantage of things, even if you don't make a lot of money and you don't have a lot of stuff and you don't have a house, that you can decide that I don't want to have a house, but I want to save more money into my retirement plan and I want to invest it like this. Or I don't, so that you're not feeling that that's the only, this is that you have to do it for tax purposes. I've always said anyway, that people, when they're choosing debt, needs to be on, is this the most cost-effective way for me to make this purchase? If you're choosing to take on a mortgage, don't see it as a tax strategy. See it as, this is the way I want to live, and this is the investment that I want to make, and realize the risk involved. And realize that it's an investment like everything else, and it's not creating any income for you. So there's also some interesting things about allowing the businesses to not have to depreciate so much things like equipment and income producing. They're still going to do the same depreciation that'll be required on structures and buildings, but for allowing businesses to expense off equipment that is used for income that they used to have to depreciate and they just couldn't directly expense. So that's going to be interesting and could also help the economy, a lot, because if the businesses are able to take more expenses now, then they may be able to hire more people, you know, and invest that back into the business growth by giving them the tax advantage of the investments that they're making in the business to allow them to be expensed off immediately. So, you know, those are interesting. So any other questions? This is going to be a work in progress. So we're going to have to come back and look at this a couple of times, because all of this is just proposed. Some things that there are some things like that the Trump administration had tried to create, like a dependent care savings account, and the money would grow tax deferred, and it was not approved. It was like, you know, no, you're not going to have this dependent care savings account to get, you know, young people to save earlier. They said they wanted to have $2,000 to be deposited tax-free into that. And, you know, interesting enough, we have to be conscious of that. Some things I want y'all to be looking out for is enrollments into your healthcare plans that are coming up now, skipping the point. And do you have any questions about which plan to choose? Take advantage of your membership meeting in order to discuss that, get all of the options, get all of the information. Yes, indeed, Mr. Johnson, that HSA accounts, we definitely are going to discuss that. You know, are they necessary? When do you need it? When do you not? How to make is health savings accounts, you know, beneficial to you? How to make the plans that are available at work beneficial to you? So these are the things that we need to talk about, especially as we see is the 401k maximum going to be reduced? No, don't see anything like that happening. That's not what it's saying. It's like full steam ahead on that, getting you to participate in your retirement account. So, you know, that's a good thing. That's a good thing. You know, we'll see what's happened. There's really no benefit to the government to reduce what we save for ourselves, because they really want us to not be dependent on Social Security. So the more that you save now, the less people that they'll have to take care of at retirement age. So the more people that they can make financially independent, you know, or preparing for financially independence, the better, because our country cannot afford to have more and more people being at poverty in their retirement years. So the more you say, so there's a natural incentive there. I always say, follow the money. You know, what's in it? What's in it for them? Well, what they'll also do by simplifying this tax plan, it'll save you a lot of money, because there are more people who will be able to do their tax return on their own, but it'll also save the government a lot of money, because it'll be a lot easier to audit. They're saying that they want people to be able to basically do their tax return on a postcard size piece of paper that become like that. And it, you know, literally could soon become like that. That, you know, if everybody's pretty much doing that standard deduction, you know, and they don't have to worry about a whole bunch of itemized and looking at the details and making sure that they really got that and this and that. They can simplify it, or cut down on a lot of the controversy, the problems, the challenges, the expenses, you know, for you and them. So just follow the money. Like, why would they want to do that? Why would they want to simplify it? Why? Because it's a lot easier than for audit and make sure that it's real. So they have more people, you know, saying things versus people just, you know, making up stuff, and then they have to audit to verify it. So, you know, be conscious of that. Keep good record on everything. If you're doing your charitable contributions, you know, make sure you keep up with all those things, keep up with it, get receipts from everybody, and let's prepare. I just decided to set the date for the AfroEconomics holiday celebration. It's December 15th. I'll have it in Richmond this year. So mark your calendars. It's a Friday. And I encourage all members to make sure that you come out. And all of you who want to start 2018, you know, off correctly and stay on top of things like this, please consider joining. Get the membership information at AfroEconomics. click on membership, or go to AfroEconomics.org directly to membership. Is one of the best investments you can make is in yourself. Any additional questions? Y'all have been the best. I can't believe it's 3:42. I'm telling you, time is flying. Thank you for hanging with me. I know the sound is a little different today because I don't have my beautiful, expensive microphone on this system, but I'm glad that I had it as backup, because I don't know, if I was doing a computer commercial right now, Mac would not get my endorsement. I'm right here on my HP, it's getting it in. You all take care. God bless y'all. Don't hesitate to let me know if you have any questions. Let me know if this was helpful. I'll be continuing on the lookout. I'm sure when I stop, I'll say, dang, I should have told them about that. But the bottom line, they're streamlining everything. Don't get afraid about stuff, because we're going to make it all work for you. The AMT is going to be gone. Standard deduction is doubled. Going to get the way to write off grandma and granddaddy too. And, definitely let's look at the bright side of everything. Thank you so much, Mrs. Williams. You're the best. You're the best. And I love your ideology. You're the best. You take care, everybody. Y'all have a great day. God bless everyone. I'll talk to you all soon, and maximize that taxes. No, so our people shall perish due to lack of knowledge. Let's make sure that doesn't happen. God bless y'all.